Good morning all and welcome to today's video. So today I have three pairs on watch and those are Kiwi dollar, Kiwi yen and Kiwi CAD. So it's all about the Kiwi today and I'm going to break down my favorite of the bunch, which is Kiwi dollar. The DXY, which is the dollar index, doesn't look ready to commit in one direction or the other at the moment. Okay, we're just looking for most likely a move up to here before the sell-off. But what could happen is that Kiwi dollar sells off earlier. Usually, if we were looking at the DXY and we were looking at Kiwi dollar, we would be waiting for the DXY, the dollar index, to show its hand before looking to get short on the or looking for trades on Kiwi dollar, for example. But when you see a complete dropout, and you'll see what I mean by that in a minute, you see a complete dropout on a currency and you see it across the board. So we've had a complete dropout on Kiwi dollar, Kiwi yen and Kiwi CAD. We can take advantage of the Kiwi weakness, as it were, rather than rather than having to wait for the DXY to show its hand, if that actually makes sense. Okay, so right, I'm going to break down Kiwi dollar. So you can see we've had a dropout, often in trading, as I said yesterday in my little post on YouTube and on Twitter. Here goes my throat again. I don't know why this always happens when I'm making a video, but often you just wait for 24 hours and the market will show its hand, and it has done that here. So on the higher time frames, we have this near miss down to here. Okay, that's a positive. We do have these near misses up here, but you can see that we have retraced. If we just measure this move, okay, from there to there, we have retraced more than 50%. In fact, we've retraced like about 70. Well, here we retraced a significant portion, but this is not looking like a move to take out these near misses up here. Okay, so what do I see as I drill down? I can see that we have this high that taps above there. We then have this structural move down. We scoot back up. If we just zoom in, okay, we can see it kind of reacted from nowhere to some extent. It did break above here, but the actual reaction was pretty much from nowhere. But what we had afterwards is we had you can see that this is a completed piece of structure, so we don't need to return up here. We had consolidation underneath this high here, okay, suggesting that this would be an impulse correction continuation, and that's what happened. So now the market is starting to show its hand a little bit. Then what happens as we drill down, you can see that we had a completed piece of structure here. I've just cut through this wick, but you can see the sections. We have the first drive, second drive, third drive, the expanding pattern. Okay, we drop out, retest the back end of this, leave a footprint. Okay, come off, sell to the downside. Price leaves a little bit of a near miss to here. Okay, we have this kind of completed structure at the time, but this sharp pullback in itself there was an indication that there were likely orders above price dragging price up. So even if we did break the low, we would likely tap it, come back up to fill the orders that were above here, and most likely above here as well before moving to the downside. What happens? We near miss to that again, drop out, move to the upside. Then we do tap into the orders that were being dragged up by this sharp move up here. Okay, and we tap into the footprint, which is often what happens. We tap into the footprint that was left here. And how do we do it? We did so by way of a reversal structure. So we have the reversal structure there, middle section. Okay, this is slightly strange. When we had the push down there, we would anticipate the sort of tighter flags before committing to the downside. Instead, we got one which pulled back about 80% of the move. We have the tight correction in it. We drop out. We then have this kind of just this pullback here. Price comes down, leaves a footprint. We then have the three drives again. 1, 2, 3. That's not a trade I would have taken. That is most definitely on the higher risk side because you could have been tagged in, tagged out, and then this becomes a reversal structure which breaks below there. Okay, and potentially that would take us up to this area here, and then we would have that kind of structure. Okay, so I wouldn't be interested in that situationally. That's easy for me to say because I'm at break even for the month. There's been literally no trades that I've been able to get involved in. So until I'm in profit by 2% for the month, then I only take lower risk positions. Okay, so you can see that we've had the dropout now. The price has shown its hand. Okay, and if I just unhide the forecast, what I'll be looking for, let's try and get that off of the chart. There we go. What I'll be looking for is because we've had several corrections already on the way down, and because this is a big dropout, what I'll be looking for specifically is a three-touch 1 hour continuation or a two-touch 1 hour continuation with a three-touch structural approach. So by two-touch continuation with a three-touch structural approach, I mean if we have a little footprint there and we come down and we have this, so we have like a three-touch there, 1, 2, 3, which taps into that. So that would be the second touch. That would be the first. That's what I mean by that. I do apologize for the drawing, but a three-touch structural approach leading up to some kind of hook point, which would then be the first touch. And then the third touch of the three-touch structural approach would be the second touch, if that makes sense. I would look to get short with a risk entry within the flag, and then I'd be able to manage it down to, I don't think that holds much weight, but down to that first inflection point there for 2.6%. And then what I would do in this instance, because we have a sharp move there, okay, what I would do is often these sharp moves are where the liquidity is, and we know that at 90% of a range, so if we measure the range from it, I don't know why that's just gone on the chart. Let's try that again. If we measure the range from there to there, okay, that will be 90% of that range, which is often where we see the sharper pullbacks, which I'm not interested in sitting through. So what I would do in this case, I would actually set a take profit here at the blue line. Okay, and just for a quick 5.57%, that would actually be my most profitable trade of all time. So that's certainly not to be sniffed at. I've had plenty of 2s, 3s, and 4% over the years, but that would actually, believe it or not, be my most profitable trade of all time. And because there's a sharp hook point set below it, where we could likely react from and pull back aggressively, I would set a take profit there whilst trailing my stop. So that would be just a little short-term move. So that is Kiwi dollar. Very happy with that one. And I'm just going to monitor this periodically. Today is without question one of my most busiest, if not the busiest day of my life of all time. So whether I manage to catch any of these or whether I'm able to keep up with everything is another matter, but we shall see. That is Kiwi dollar. Let's move on to the next one. So this is slightly lower down on the list because we have, if we just zoom right out, you can see that we do have a near miss above price. Okay, so this is slightly higher on the risk side already. So unless I manage to catch Kiwi dollar, for example, which would be the lower risk trade, and I manage to get in profit by 2% before this shapes up, I will not be taking these. Okay, but something happened the other day where I left something off of watch, which was higher risk. And then I realized afterwards that if one of my lower risk positions had shaped up and put me in profit by 2% for the month, then I could have actually taken that trade. So there was actually no reason to leave it off, if that makes sense. But if one of these sells off, then they will likely follow suit. Okay, they all sold off in tandem yesterday or last night. So I wouldn't be surprised if, they fall like dominoes, as it were. But I've got this on watch anyway, just in case I manage to get into the low risk position and this takes a little bit longer to shape up and I'm able to get into it. But what you can see here is we have a near miss there, but we also have an area of liquidity on the higher time frames where there was a very aggressive sell-off last time around, suggesting that there may be liquidity there. Okay, we also have a three-touch structural approach leading up to that. You can see that there. Okay, just seeing this is a bit of a separate structure. We can separate all of these structures. And you can see, if we just start to zoom in a little bit, you can see that the market has started to drop out, okay? Now, one of the reasons that this is higher risk is because, of course, this is not closed yet. One of the reasons that this is higher risk is because what this could be because we have that higher time frame high set just above. What this could be is this could be a correction like so, to push down to there, to then break above, to give us that, to tap into the high that we near missed to then sell off, and then we would have this kind of structure. Okay, so it wouldn't typically look so much like that, but what could happen is that we could have the consolidation, which I'll be looking for on the lower time frames, and then what could happen is you get tagged in, tagged out, and then price starts to move more like that before pushing up, and then that would look more in keeping with what we would typically see before that, potentially that move to the downside there. Okay, and if we just, I think it was this pair. I'm sure it was this one and not the next pair. Let me just have a look. If we just measure, for example, from here, that's slightly over. I think it was Kiwi CAD. I'll touch on that in a minute. But yeah, so if we've dropped out, you can see we've dropped out. How did we drop out? This is the other clue. We once again dropped out. You know, we kind of this already is indicating that this entry might not shape up, because this is not a typical sequence for a move to the downside. So it wouldn't surprise me if price starts to consolidate. It looks like it's forming a flag, and then all of a sudden we get something more like that, and then that the whole thing just becomes a bit of a middle section for that move to break that higher time frame high. But we shall see. This is one of the reasons why I'm waiting for weighted price action, and by weighted price action I mean a 1 hour flag, so 6 to 8 corrective 1 hour candles before I look to entertain a move. This looks slightly undeveloped. We do have 1, 2, 3, 4, 5. This is the fifth candle at the moment, so this would close at 9 a.m. The next one will close at 10 a.m. Okay, but what I'll be looking for in this instance is the same thing again, exactly the same as what I was looking for on Kiwi dollar. I'll be looking for this, and because we're quite far into the move and all things considered, I'll be looking for a 3-touch 1 hour flag or a 2-touch 1 hour continuation with a 3-touch structural approach. I'll explain what that was a minute ago. Then I'll be looking for the risk entry within it, and then there's not really anything to worry about on the left. And this would just be a short-term move where I would, once again, if we just zoom out, we'd have to zoom right out on this one. I would measure from there. Okay, what's happening here? I don't know why this does this, but there we go. Right, so I would measure down to there. If we just zoom in, okay, which just so happens, by the looks of it, to take us to where that sharp move is anyway. Okay, so that would be 90% of the range. So I would actually set the take profit at that area there, trail my stops accordingly, and even if we did react from there, okay, and we broke the low and came back up to test that higher time frame high and then drop, that would still give me something in the region of 8.5%. So that is Kiwi yen. So I'm going to just monitor that just as I am with Kiwi dollar. And I'm going to have to move on because I've got so much to do today. It's unbelievable. Okay, so right on this one, Kiwi CAD. If we just, okay, let's try that again. Weekly chart. There we go. So we've tapped this low here. I don't know why all of this is on the chart. Some strange stuff has been happening on TradingView this morning. Okay, so we tapped that low, moved to the upside. We tapped into this high here where there was a sharp exchange of liquidity. We have been moving down correctively. Okay, however, if we just zoom in, okay, we have a near miss here, right? So we have a near miss here to this high. This is, in my opinion, an experience not as good as Kiwi yen, the setup on this, and this is what I was wanting to touch on. So once again, we've had a dropout. We've got most of the way here. We did tap into this consolidation, but kind of near miss to this high here. But we've had a dropout, and we could be seeing a move because when I did my forecast, because this correction is forming below. Let's try that again. Because this correction is forming below this low here, okay, that could open the floodgates up for a move to the downside. But if we just measure this, so we have this, if we measure that entire move, we actually are wicking at the 50% mark. Notice that we're wicking at the 50% mark. So just as with Kiwi yen, I wouldn't be surprised, even though I'm going to be looking to get short, and even though we've dropped out of this consolidation, you can see once again that we kind of got to that area by way of a 1, 2, 3 touch move. We tapped into this structure, but kind of near missed to that. I wouldn't be surprised, given that we are rejecting from the 50% mark of this range from here to here. Wouldn't be surprised if once again this starts to consolidate, but then starts doing something more like that, and it gets really messy, and then this whole thing just becomes a middle section to tap into either that high that we near missed to, or the highs above. Okay, so I wouldn't be surprised if that happens. One of the things I do, I'm just going to show you this quickly, or show you the forecast actually first, and then so it's the same thing again. 1 hour continuation, 3 touch 1 hour continuation, or a 2 touch 1 hour continuation with a 3 touch structural approach. Risk entry within it. I would be able to, then that's a weighted flag, it's a weighted structure. I'll be able to manage it down to low for something in the region of 5%. And then once again, I would use the mechanical management system, and I would measure it from there to there. And I would set a take profit there, okay, whilst trailing my stop loss accordingly. Okay, and that would give us something in the region of 8.5%. I have customized, I don't know where that's got, there it is, right, okay. So we have this, this is one of the things I was using this anyway. Positioning. Am I well positioned? This is the questions I asked myself. Am I well positioned if this was to shape up for a move to the downside? Yes. Is the sequence great? Well, I've got a green tick, a silver tick, and then a cross. The sequence is okay because the sequence isn't great because we started off once again with this, this kind of very sharp pullback, which pulled back more than 50% of the move. However, we've dropped out. So the sequence isn't great, but it's okay because we've dropped out of all of that now. Okay. And we're trading below here. Then the entry. I've added these questions in, which have really, really helped. And I suggest that all of you, regardless of what strategy you're trading, add these questions to your pre-trade checklist. Entry. If the market was to take me out, why would it do so? Why would it do it? Okay. Well, if the market was to take me out of this trade, why would it have done it? Probably because it's trying to find liquidity from the areas that it near missed to. Okay. If we just zoom out, we had a near miss to there. That would be why it would take me out. Okay. And if it was to take me out, if it did take me out, what would it look like? Okay. Well, what it would probably look like is we'd have the consolidation there, tag in, tag out, and then price maybe starts to do something like that. Okay. Taps into the highs, as I just showed you that it near missed to, and then we'd have something like that. So I kind of asked myself, does that look unusual? No, it doesn't look unusual to me. I've seen that many times before. So if it doesn't look unusual, then this, in by definition, unlike with Kiwi dollar, is a higher risk trade. So what I've got is a little preset here. So if I just set the preset settings, so I've got this. Okay, so we know that we're well positioned. The sequence isn't fantastic, and then I've used little emojis here. So I would deem this to be a higher risk position, okay, for all things considered. So that helps me to determine, okay, well, if I'm not in profit by 2% for the month, this is important when you've got funding and drawdown limits, etc. If I'm not in profit by 2% for the month, then I don't take these higher risk positions until such times as I am in 2% for the month, 2% profit for the month, okay? And that could occur if an entry was to shape up on Kiwi dollar, okay, which put me in profit by 2% for the month, if that makes sense. Do apologize if I've rambled a little bit and made a little bit of not as much sense as I usually do. I'm incredibly busy at the minute, and I've got a lot to focus on, and these are things which are pretty much beyond my control. So I've got to do what I've got to do. But anyway, I hope this has provided you with some value, and I'll see you again in the next video. Thanks for watching.